Hello and welcome to today's daily education here at Forex.Academy. I'm your host Robert Blackwell and have the pleasure to walk you through today's daily educational video. Now before we do so, please consult the following disclaimer. There is of course risk inherent when trading in financial markets. On the content of today's particular daily education, we will be discussing trading charting patterns. So it's very important not only to analyze the particular structure and formation of those Japanese candlesticks on the daily time periods or shorter time periods, but to look at the overall structure of several candlesticks that make up price action, to be able to look at price points, inflection points within the market structure to look for those trading opportunities. So what I'd like to do is just go through a couple of charts here with you. We have the Euro US dollar here, a price action chart. It's over a long-term price chart from around March 2017 up until today's price action here. If you're a long-term trader or even in the short term, you can look at the overall market structure, the trend, to see when these markets are providing overall signals. Again, not in terms of one particular candlestick itself, but in terms of an overall level or inflection point within the market. So let's try and analyze a few trades here in our euro dollar price chart. And the first thing we'll notice here is we have an upward trend here. And until that trend stops, we need some sort of verification. So one popular price action charting pattern is a head and shoulders pattern here, which is presented with the first shoulder to the left here. Then we have the price action trading up again to our overall head structure here. And you can see with the candlesticks again, we have 1, 2, 3 rejection candlesticks showing us that this market does not want to trade up. So that's creating an overall level in around this price. And then as the market trades down, it creates another pop up right here, right to our second shoulder, creating the overall formation of this market structure. So just resisting temptation to try and buy this market, looking at this the price action chart in terms of the overall layout of the market. Again, we have the right shoulder here telling us this perhaps is slightly lower on its left shoulder again. So as an overall structural level, it's looking to trade to the downside. Again, we get a little bit of a boost, a bit of a trade to the downside. Again, it's quite short-lived given the overall structure to the market. But the point being that we can look for opportunities in terms of deciphering this price action to detail to us how we can look for possible opportunistic moves. So right here at this price action, how likely is it that this market is going to trade up from this area, given the overall structure of our head and shoulders pattern and the pullback in terms of the move from the overall highs of these candlesticks as well to relative levels. Now, as we move across the price action, again, we see yet another upward trend in this market. And I'll just follow this with some annotation here with our green pen. We can see the market moving up to all-time highs here in just in terms of the relative price action we see on chart all-time highs to a new level of consolidation. Okay, so quite a strong trend structure. Then inevitably what we see is our double top. Okay, this is our double top signal here in the top. So we see this triangle pattern trading up to new highs, reaching a high, reversing from that high to a relative low, creating our boundary point. Then retracing to try and get strength into the market again, and we get a rejection from the candlestick again, right at the same level. So right here, guys, we can see that is our double top formation, and that tells us that we have caught a potential high point in this market in around our 125.50 level, right at these price points. Again, if you're objective in trading the markets at this time, you wouldn't necessarily look for the next leg of this market until these prices are broke and the trend continues to trade above these points. So if we look at analyzing these markets, of course, you could deliver some debate on your Elliott wave theory here. We have our first leg, then we have our second leg here to the upside in terms of the trend. And again, until we get that confirmation of trading above our 1255 level, that would constitute a buy opportunity, inevitably looking to trade a possible third leg to the upside. But that does not happen. We see the double top formation effectively gives us a signal that we have reached these highs here around level. Again, the double top is confirmed. And again, we see a level of consolidation at such prices. These lows, again, are specifically important in terms of the market structure, just because they're at lower levels. And again, we see within the trend, within the price consolidation, yet again, another small double top within that structure before effectively we get momentum to the downside. Okay, we break our technical level of support. So effectively, there's a lot of simple technical analysis to do here simply by looking at the charting patterns. Now, as a technical price action specialist, this is simply what you're looking to do. You're not necessarily looking to highlight a trading opportunity for one particular price action in terms of the candlestick itself. Again, you could say, well, this is a very strong signal, this engulfing bullish Mariposa candle to look to buy this market. Inevitably, that is a good signal because the market does not retrace to such a level and continues to trade up. But we look at overall structures in the market to dictate overall price moves. So I'll just remove away all of this annotation. Again, here is one real signal or head and shoulders pattern to dictate that this market does not want to in the short term break highs. And again, as the market trades up, we get a double top, a very constructive double top at our 125 level to tell us that this market is looking to resist a new ceiling in this market. And again, if we have a price consolidation, we can start to deliver our bias potentially from a breakout trade to the downside if 125 holds up. That's effectively what happened. The market trades to the downside just by looking at these market structures. Let's move across to another market here. What we have is our cable market, the sterling against the US dollar. And again, just one very obvious one I'd like to point out here in terms of the market structure. We see a very, very strong trend. Again, this market trading here and then lift off to the upside again to our highs of 140, around 143 there, just at these levels, okay, right here. So very significant. Now again, we see a lot of volatility just in this price action, moving from swing high to swing low again in the market. But again, if we look at the overall structure, which we'll highlight just in yellow, guys, we have the double top formation here again in terms of a long-term price trend again. So is it of any coincidence, again, if we just remove this analysis, is it of any coincidence, guys, we get a touch of these highs right at present levels here, right at present levels when we see the full reversal of the trend structure. So again, it's almost like a large M shape, if you can give that an alphabetical structure there. You see this M straight breaking to the downside again. There's something quite, reflective or a little deeper in terms of the structure of this overall long-term market trend, as opposed to simply observing one or two or several price action charts, candlesticks, just to say, well, there's a signal, here's a signal here, there's another signal there. Let's look for momentum. Of course, in terms of understanding the overall structure of that market, we see that the M double top is visible. And then when that fails, the channel fails and breaks out, there's another trend to the downside. So just try and factor this charting pattern structures into your overall trading, of course, whilst at the same time looking at the candlesticks, and of course use your fundamental knowledge of the markets as well as technical analysis to add that technical confluence and informational influence to your trading. So that just discusses a little bit more information in terms of looking at charting patterns, not only with the price action candlesticks themselves, but looking at a bigger picture structure of the market in question to look for those technical setups. So that concludes our lesson today, just the daily educational discussing charting patterns. Thank you very much for joining us. We'll see you next time. Bye for now.